TQQQ, which is a bull, came down and hit its major support levels. So this was the neckline over here at 53.92, give or take a few pennies. And it's not so much where this bottom was right here, where it started to here. It's where you had a 4-week reversal back here in 2010, and you had set up a base. And what we did here is that we broke to the first high, the second high, and then the double top or triple top highs on the bull. And then, as we had said, when you look at the Nasdaq 100 and the Nasdaq comp charts, so when we have the TQQ bull, let's kind of center this a little bit better. And here's the Nasdaq comp weekly. Stretch that over there. MMTs, what you really want to know is that Thursday and Friday's part of the 5-day price action was that we had 2 days up that would come within bear trend bottom up trade management, and how that this works and why it works the same way it does. It always works the same way. That's a 52-week low. That's where the buying started to come in. When you take a look at the bull up here as a great short on this monthly chart, which is a Nasdaq composite, you can clearly see that 10-month moving average up here, you can clearly see where the neckline is. Here it is. The dip buying came involved. This is a big reversal here now that we said would happen in the dog days of August. Because right now, today's date is 8/14/2011. We're far from being over. It's not final. But what I want to point out to MMTs is how that 10-month moving average is starting to do what? Everything that a bull wouldn't want. When it was rising up here in value, of course, we were breaking out to all-time highs month after month. But now there's a significant change. And that your dip buying came in 2 days of this monthly wick, Thursday and Friday of last week. That's where they came in. And that's where they're fighting with. It's always going to be, you break the 10-month or the 10-week, it's always going to be the lower rising 20-month moving average. That's that red line right here. There it is. I got my pointer on it. And basically, that's still rising in value from the long-term bull over here in 2009. The reason why we have key support levels, the Nasdaq composite is part of the Nasdaq composite on a weekly. You can see that 3-week reversal. This is the calendar month of August. Now, having said that, let me show you something, is that 20-month moving average is going to be a tug of war. We dipped below it, and as we were dipping below it, we were coming down on a weekly level, and on the Nasdaq composite right here, you can see where that knife hook was. Now, when you're trading the bull, that's this weekly bull right here. Let me pull that back up for you, MMT. You can see how the bull did the same thing. And that the upside neckline resistance levels is where we're going to look at where that trade management comes into play. Why is it? I can tell you why. Every attempted 52-week low, or every attempted 52-week multi-yearly low, has a trade management. And within the transaction, there was a whole bunch of people that were short, not too many, but they were buying to cover here. And then you had the bargain hunters come in the marketplace, because that's what they did here. The bull is adjusted to that Nasdaq comp and that Nasdaq 100, and it's very important that you can short the bull intraday. MMT, this is a TQQ $60 put. And on a weekly level, they got to 60 cents and then just made a high over here of $8.80, and they pulled back to $2.05, and they expire. Of course, this is going to be the when we get into Monday, tomorrow morning, is that when the bull broke down, of course the put options went up, and we're pulling back in here. And what I'm telling you, within bear and bull, so we were inflated, and now we're not, and we have pulled back here. And that this is a $60. Wait a second, this is the $60 put. When the TQQ broke down, you broke out extremely high up here, and you were inflated. Now, from that inflated price, within part of the structure of the two-day breakout last week off of the bottoms, is that they pulled back, and they're going to set up again. And forward looking between bear and bull trends, that is that you peak and you pull back, because that's what we're doing here on, and I'm showing the daily chart on that $60 put that was in the money. And as the TQQ broke higher over here in the weekly chart, here's the weekly chart of that bull. You can see the amount of buying that came in right here on the TQQQ. And over here at the $60 put, that was deep in the money at the time when this occurred right here, is that the inflated value pulled back to a wholesale value. And that bear and bull trends in the shorter cycle, when they get so inflated, of course that side of the market had to come down. And at the very same time, the call side of the market, calls and puts can be bought. So when the bull, that TQQ, wants to reverse with markets, it's a great place to be. You can see down here when we had the monthly 1 day, 2 day, 3 day, in that last 5 day period last week, you can clearly see that these were at 60 cents once again. And buying puts on that TQQ bull is the right thing to do, and to take it and sell into the highs. Now, having said that, when you look at the weekly chart over here, you haven't gone into a sell signal on the bull on the TQQ, but the TQQ has to be related to the Nasdaq 100 and the Nasdaq comp, and some of the key sector indices that we did yesterday that are up on the website, such as technology. And key components there is that when we bounce, and that taking the call side is the right thing to do. And part of what we're looking at here now, that Nasdaq comp wick and that wick, and it all happened in 2 days. Now, here is the opposite side of the TQQ. This here, like any kind of weekly trend, and we had really come up here to 35 on the bear, but the bear had set a bottom up down here, and here's the artery of that support level right there. And here is the trend lines right here. Because when that was bottoming up, that was top down trade, okay? And look at the multi-year picture of the SQQQ, the bear. Look at the bases. Look at the weekly ranges for all of calendar 2011. And we finally pulled down here. We put that low in, and we popped right up here to that major resistance level. Now, unlike the bull, what will end up happening here as we set up on a weekly level, and that's 5 trading days, and you can see here that has not gone into a weekly sell signal, but then the bear has not gone into a weekly buy signal. And it's going to, we're in the dog days of August when these kinds of moves from extreme reversals to the bear bottom part of the trade, bear trend of the trade is how I trade that bottom up, and we had 2 days of it. But let me tell you, as we pull back in here and we hold and we base on a weekly level, that means that the upside resistances in the indexes and the leadership and the key names within the indexes that are tied to this component will also hit resistance levels and then reverse and pull back. As this is building a base on the bear, the bull is going to have a lot of trouble up here at its neckline resistance at 70. The bottom of the wick here of that selling is at the bottom of this weekly bar right here is above and closing up here to the neckline, but it's where they overshot that part of that selling during that week. That's a positive close. And the bear, on the other hand, it takes a significant period of time as to how markets make their traditional changes in bear bull trends. There's a process that happens between the two parties. So what I'm trying to tell MMTs very clearly is that resistance is going to be extremely hard as we go into tomorrow's trading and the forward couple of weeks of what's left of the dog days of August of 2011. And that the support levels down here will set up themselves up. And if you start to base, you can't take out resistance. That means that the high beta names are going to go up in their deltas at higher resistance levels, and they're going to be sold short and going to roll over. So we're going to be watching the key element of this 3-week breakout and that 3-week reversal between both of these parties. Now, having said that, is how things change and how new trends make their bases and how they trade in resistance and how they trade back at support levels on both parties. The put to call ratio within the indexes are at turning points, and we're going into a major options expiration starting tomorrow morning at 8:15 of 2011. It's very important to know, though, what side of the market that you trade the bottom up, but there's going to be a longer term trend that sets up here. And we can clearly see how the tops were here, but we can also see that the original bottoms, and we went lower bottom here, and then we finally put in that one where the big breakout happened. That was a big trade in this bear ETF and a big short on the bull. You make money when that falls in 3 weeks, and you make money when that goes up in 3 weeks. And moving forward in the dog days of August, it's very important that there are call and put strategies that can be used. It's not like they're really high beta, because they're not. But they do provide, if you have enough volume of the contracts and directional movement. So buying the bull here and taking the opposite of that move in that 2-day time frame was the right thing to do. So we're going to be talking a lot about it as we move in tomorrow's trade management in the upcoming 5-day period and the second 5-day period, that we finally get toward the end of the dog days of August. Not only that, there are certain kinds of trade managements that happen. Low volume is where you can bottom up and you can bottom down here. And it's not, what we're going to look at is this trend line right here, the second one. That's half of that weekly breakout bar, or this big weekly reversal. So if I'm shorting here and I'm going long here, I'm doing quite well. And individual equities, of course, the SQQQ is breaking out, and this bull The bull runs much higher in price beta than the bear, but nonetheless, individual equities continue to sell at their resistance levels. And the weekly moving averages here are all pointing down as far as the 10 and the 20. So any up move to resistance levels are going to remain short levels. So that once the bounce does take place in the next 5-day period, price action and volume, from the last Thursday and Friday bottom up process and the bear market trend, our bear trend, let's say, okay, because it is, it's bear mode here. So bear trends have a different way of trading than bull trends, and we have them both here. Moving forward, like I said, it's about which side of the market you're going to transact and what side of the market pays.